Good morning, everyone. This is Ryan Ender with your Wednesday, February 27th market notes here. A little bit of a slide here yesterday, so we'll cover a couple of these markets and what the slide meant to them. So again, we'll start in corn. Yesterday's slide meant a little bit more to corn than it did to beans. May took out the recent support at 377. As soon as you took out 377, we did find larger scale support as we would expect. But seeing the fact that corn did take out that 377 support, we really have to look at that corn chart now and say that it's still mostly sideways, but it's kind of hard to argue that now it's sideways with a slow grind lower. If we keep, on each setback, we keep taking out the previous support. So we'll call it a very slow grind lower. There were signs of light to moderate funds selling yesterday in corn. We saw a little bit the day before and a little bit more aggressive yesterday, so still just maybe a day and a half worth, nothing to get overly concerned about. But again, if we see a pattern of this continue over the next couple days, then we'll want to watch out for that. We'll definitely want to watch the commitment to traders report to see if funds are actually starting to build any kind of a significant short position in corn. And lastly, we'll say that ethanol comes out today. Again, that has a pretty long streak of being slightly disappointing. So we'll also expect that to be slightly negative news here again today. Moving over to the beans, yesterday's slide made it look like the beans had a tougher day than the other markets, but actually we moved just a little bit past right in the middle of the recent range. It's probably worth pointing out that for May beans, the lead contract, that right in the middle between support and resistance is 920 3/4. So there's a number to keep in mind to put things into perspective. When we look at the quotes, keep 920 3/4 in your mind, as that is the level for right in the middle of the range. Beans have shown signs, they've shown signs lately that they need larger scale Chinese headline news. Just a random tweet or a random message that seems a little bit positive just isn't drawing the kind of support that it had in the past. So we do need to focus mainly on larger scale headlines, either positive or negative for the bean market. The part of the reason for why people said we had a setback in beans yesterday is we had heard that there's talk that China's going to buy 10 million metric tons late last week, yet we haven't seen it show up as 8 a.m. sales yet. Not necessarily a bad thing. Again, it caused a setback, and we don't necessarily expect that that will be immediate, but again, trade wants to see it be immediate, so you have immediate good news. So let's keep an eye on these 8 a.m. sales to see if some of that 10 million metric tons does start to show up on those 8 a.m. sales announcements. Over in wheat, the selling continues. We will say that yesterday's selling did seem to be on a lighter volume scale, yet the move still caused new contract lows. So it's tough to get too positive on just talking less selling. We are down at such low levels that if you can make a case for any kind of a bounce, speculators would likely be in there and help to bounce this market back. But again, lighter selling may draw in a few buyers, but we probably need to see a day or two of no sign of funds selling if we really want to get excited about any kind of a bounce there in the wheat. We did get state-by-state ratings here recently. They were lower than they were in November, but we do need to keep in mind these state-by-state ratings are a bit of a guesstimate yet, not something trade tends to get overly excited about. As of February 12th, we got the commitment to traders as of February 12th for the wheat, showing that funds had already worked to a 16,000 contract short position. That's not that large yet, but we do have reason to believe they could have a pretty significant position now, because February 12th they had a 16,000 short. The drastic fast selling didn't start to February 14th. So this report of 16,000 shorts does not factor in this recent active slide. So we do want to keep an eye on that commitment to traders report for the wheat market as well. We might be surprised in a couple weeks to find out just how short the funds are. Moving over to cattle, the exact opposite case there. Light fund buying is still being seen there. We can make a case yesterday that light fund buying was seen again despite the plus 44,000 show list. So speculators are still buying the cattle, yet seasonally we do expect supplies to pick up, and we did see the 44,000 higher show list. And then seasonally in the futures, you tend to see a high in early March. So we'll say that the seasonals and the fundamentals are starting to turn negative, yet speculators for the time being are still buying, even though yesterday was a bit less volume buying than we've seen. So we'll want to keep an eye on the cattle Futures have already factored in a $1 higher cash trade, even though a 44,000 higher show list might suggest $2 lower. So here's a $3 difference. It could be an active cattle market this week. We'll have to pay attention to bids and offers as soon as we see them out in the cash world. So that's what we have so far today. Again, if you have any questions, give us a call, 800-551-4626, or always visit us on the web, allendale-inc.com.